And time now for the markets with Leighton. The USDA released their forecast of the 2013 crop on Friday.
That's right, Amy, and obviously with the type of spring that much of the country is having, including Mississippi at times, there were some big questions to be answered by the new numbers. In the markets this week, expectations for U.S. corn yields had been mixed ahead of the new report. The cattle market waits for cheaper feed as a couple of forestry products companies in the state announce expansions. At midday on Friday, May 10th, the government released its monthly supply and demand update for all U.S. crops. Analysts on average expected old crop ending stocks for corn, soybeans, and wheat to be just about unchanged on the month and down on the year. Now, the real news out of the May report is that it provides the USDA's first official yield expectations for each crop for the year 2013. Extension Ag economist Dr. John Michael Riley answered some questions about the new report and the yield forecast for corn and soybeans. John Michael, we're recording a little bit ahead of the May 10th new USDA numbers. What are we expecting maybe that report to reflect right now?
Well, I think everybody's looking at the weather maps and realizing that the corn, soybean, really all the spring planting is way behind. That's been known for a while. That's been playing into the market. We've seen quite a weather premium placed in the market since the grain stocks report that pushed prices so much lower. But I think that's really the expectation as we move forward is what is USDA going to show for yield for both corn and soybeans due to the fact that we are so far behind.
But no doubt there will be a change maybe from what we saw a month ago.
Well, this is going to be the first yield expectations that we get for the upcoming growing season, and so everybody's on the edge of their seats. If you look at, of course, it's still very early in terms of expectations that are being put forth in the general public, but yield expectations from market analysts are really all over the board for corn, which is not unexpected. That's one where we do get a lot of variety. Soybeans, it's a little bit not quite as wide. But you know, trend yield would put it somewhere in the neighborhood of 156. I've done some just simple regressions, and I'm getting that same number. Somewhere in the neighborhood of 40 to 43 for soybeans is what could be expected. But again, it depends on how USDA factors in this slow planting.
Any kind of recommendations or thoughts? How do you think about marketing corn in this scenario? Any recommendations for producers?
Well, by the time this is released, it's obviously going to be the report is released. But the biggest thing is just to stay out of the market on days like when big USDA reports are released, because so much can happen in that day's trading. So the biggest thing, stay away from the market, but always, if you can pencil in any type of profit, I think that you want to go ahead and try to at least book some of your crop, whether it be corn, beans, cotton, anything out there. If you can pencil in some profit in today's market, you need to do that.
On a bigger, looking beyond Mississippi a little bit, are we expecting maybe more soybeans nationwide, planted acreage, people leaving corn and wheat due to problems with weather?
You look back, everybody's looking at 1984 when we had similar weather conditions, and planting intentions changed by 2 million acres. So I think people are saying maybe we lose that many acres, but corn acres are so high the market can handle that.
It takes dependable tractors for planting and other farm operations, and a recently released study indicates world demand for tractors is expected to increase almost 7% per year in the short term. China alone is expected to take about 31% of the global sales total. Agricultural tractors continue to account for the largest share of equipment sales, according to the publication World Tractors. Speaking of the world, our trivia quiz this week deals with the topic of world commodities. The most heavily traded commodity in the world is crude oil. Our question, what is the second most heavily traded commodity in the world? Is the answer A, cotton, or B, coffee, or C, sugar, or D, pork bellies? You'll find out our answer before the feature story this week. We begin on the livestock side of the markets now with feeder cattle. The perception of grains going lower is providing some support here. Trader Tom Fitzenmeyer says this market has been depressed fairly well.
The numbers are going to dictate that there's probably a fairly good support somewhere down in current levels or maybe a little under. And then if we get cheaper corn and we can get some strength in the fat market, there's probably an upward draft to that market, although I wouldn't get wildly bullish on it for a while, I guess. Dairy producers, like everyone else in the livestock sector, have also been battling feed costs.
Meanwhile, Ag Market News says this week that retail sales for one particular dairy product, cheese, are, quote, uncertain right now. Analyst Naomi Bloom tells Market to Market that milk output may be changing some here.
The production in the U.S. has been down just a little bit for milk. And so depending on nutrition, that may continue. The other factor with it is that the cheddar price has been actually up a little bit, but that's more reflective of what's happening in New Zealand. The drought in New Zealand is continuing, and it is really bad. And those animals are grass-fed. They're grazing animals, and so they do not have food. So that market for milk and cheese has just skyrocketed higher, and so we've actually seen a little bit of demand come to the United States, and we're exporting out. But at the same time, we just don't have a reason for the market to just go higher than 20, yet at the same time, $19 seems to be a well-supported area.
Some new jobs related to the lumber industry are coming to North Mississippi. Shamrock Plank Flooring of Horn Lake, a division of J.T. Shannon Lumber, says it will be starting a new $1 million operation soon in nearby Hernando. This will mean 25 new jobs involved in producing high-end hardwood flooring. Meanwhile, Fly Timber says that it is expanding its operations in Grenada. The 32-year-old company is making a $6 million investment to enable it to begin cutting railroad crossties for shipment to a nearby treatment facility. Officials say that this expansion will create 30 new jobs. Well, before our feature story, let's look at the trivia answer for this week. And the correct choice is B, coffee. Again, the most heavily traded world commodity is crude oil, followed by coffee.